Good morning, everybody. It's Wednesday, November 22nd, and this is the AgYield War Room. My name is Dan Dempsey, and I'll be moderating today's session. As always, if you have any questions or comments, please feel free to reach out or leave them in the chat area, and we'll be sure to get those as the show goes on. Quickly, overnight markets. December corn was down a quarter, 469 3/4. January beans were up 10.5 at 1366 3/4. And December Chicago wheat was up 3 at 558. USDA announced a couple of sales here this morning. We had 110,000 SRW to China for 23, and 128,000 corn to unknown for 23 as well. A couple of administrative items. There will be no war room tomorrow for Thanksgiving or Friday. We will be back with you Monday at 8:15 Central. And as far as market hours, markets are closed tomorrow. We have a full open today, but a closed tomorrow. Reopen Friday at 8:30, and we're closed Friday at 12:05. So an early close on Friday, and it's also option expiration. So quite a bit going on to close the week. As we start out this morning, just a couple of things to note. We got some estimates out yesterday, just private estimates that can kind of continue the theme between corn and beans. And, with that being said, I think I'll kick it over to Justin. We were talking as we go into March, and it's been a common theme that we've discussed, but we believe that with this price action and the ever-evolving fundamentals that we could continue to see those numbers, fluctuate a little bit going into March.
You're talking about acres, right?
Correct.
24. Yeah,
Yep.
We've talked about it in our letter for a while. The ratios at a pretty high level, meaning the price ratio of soybeans to corn for the 24. We had much larger than expected acres last year. And I think we're going to go back with the price action and with just kind of going back to a normal rotation. I think bean acres are going to be the leader. So obviously prices can dictate that if, something happens, to safrinha corn or something. But right now the actually, has been, all the attention's been on Brazil having weather problems. Obviously we're down 10 overnight, but we're closer to contract highs than lows. And, corn's been a dog. It's just kind of hovering off of contract lows. And so I think there's excitement also with soybeans as far as like all the new crush capacity coming online, which we've talked a lot about, biodiesel, demand, all these new plants. So I think there's going to be a combination of factors that lend itself to farmers wanting to plant more beans. So, and maybe rightfully so. It's not necessarily a huge bearish thing, but it could be, right? We're at $13. We've been trying to take out that 13.20 area a few times. We have a lot of working orders here to get more hedges in place. We probably need another 10 to 20 cent rally, kind of in that 13.20 to 13.30 area. But again, that's just trying to use the best dollars we can, right? And in our opinion, it's, kind of low volatility, high prices, high bean to corn ratio. We want to put a little bit more dollars towards protecting, the bean profitability on the farm right now.
That's good stuff. You referenced Brazilian weather, and looking at this morning's run, there's been a fair amount of areas that have gotten 1/2 to 1.5 inches of rain, and since Sunday, there's more expected through Saturday. One thing to bring up, Justin, can you just reference kind of the time period we're talking about here, just in draw comparisons to like where we would be at in the U.S. in terms of importance of this
Yeah,
water?
well, I mean, we're not done planting yet, right? So that kind of gives you it's a huge country,
Right.
first of all, right? So you're always going to have a problem spot because it's gigantic. It's way bigger than our growing area. So to not have any problems is unheard of. B, it's a rainforest. And C, their wet time frame is usually December through February, right? So we should see it continue to ramp up precipitation as we head into December. So I think it's similar to being, really worried about a crop problem in April and May.
Okay.
Now, obviously it can stay bad or get in a worse drought. I mean, there's, that's obvious. but to that point, right, we're at high prices. Our demand is okay, and quickly South America will be taking over, on exports. I think they're already competitive against us for January forward. So, that's the issue with with South America is they have such a large crop nowadays that even if it's off 30 million tons, it's still gigantic, and they 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 grow the crop to sell it, right? So they want to be competitive, they want to undercut us, and we just historically lose that competitiveness as we get into January. So I mean, you look in January, we're November 22nd. That's 6 weeks away, where it's going to be an uphill battle to get meaningful sales on. So that's, I'd love to be super bullish and tell you, we're going to $16 and maybe that happens, but realistically, it's just an uphill battle this time.
So I mean, it's all good points. I mean, so it further lends credence to the fact that, I mean, as we're wrapping up harvest for a majority of folks here in the States, looking at 24, and building out hypotheticals at this point, you still got a ton of risk here at $13 for new crop beans, and you got new crop corn in that 515 to 520 type of area. Like, this is something we definitely need to be looking at as we come into the holidays.
Yeah, I think I look at $13 beans as having $3 of risk up or down.
Okay.
Between now and the end of 2024 harvest, right?
That's a lot of margin.
Yeah. So I mean, big risk, big reward. But again, it's like we always talk about taking the big boulders of risk out. You don't have to risk $3 a bushel. There's plenty of strategies. There's so many private products, whether it's through a commercial partner that we have, or even your local place, or using futures and options. Like, there's a ton of strategies that you don't have to risk $3 to try to make $3. It's just, that's unnecessary risk, right? There's a lot of really good tools that you can do right now, to put a really good floor in and have a ton of upside. So I think that's all we're trying to say here is just be prudent. Like, it's holiday markets, things can get squirrely. The geopolitical things that we've talked about, interest rates, the dollar. I mean, just anything can set these markets off, up or down. So I guess my only point would be option volatility is relatively inexpensive for these price levels and for the risk that I think we have. So just protect yourself.
That's really good. So when we start talking about price volatility, I wanted to, yesterday I was hoping to shoot it over to Ryland, and being a live show, we get caught up with clients that call in, and that's totally what we're expecting. But Ryland, the cattle market, we're post cattle on feed. I know it was an interesting report. Now that we've traded a couple of sessions, and certainly, like you said, coming into holidays for those markets as well. What's your thoughts?
Well, I mean, the report definitely didn't catch anybody super off guard. I think the market's preparing itself for these bigger and bigger placement numbers as we go forward. And it's kind of defeating the supply narrative that we've been trading for the past 2 years. We're going to still rely on a lot of the data to come out from the USDA with the semi-annual cattle report, just to give us much better idea of where the calf crop's at, where the inventory's at. But at this point, the supply situation, we're seeing the 90-day supply of cattle and the 120-day supply of cattle in the U.S., above last year. So I think that's kind of the threat right now to the price structure. We've definitely corrected. So obviously the dust has settled after the report. We got a nice rally after the report, kind of on the lower placement number. And then we started to set back. We've managed to kind of hold in this lower end of the range. So it does feel like the market's trying to stabilizing. It's coming to the grips with, maybe the guys that were really, really long have been bailing out, kind of reducing their exposure here. And the producers that are sold are just sitting back. There's not a reason to fight this if you're really well protected. I mean, we've been kind of marching up to historically high prices, and we sat there for so long. I mean, some guys took some heat for a while, but now it's really worked out, and people are really happy with the sales they have on. So, the price action was a little bit negative yesterday. Not that bad, all things considered, but it was still just a little bit weaker nonetheless in both cattle and feeders. Beef prices look. Select took a little bit of a dive yesterday, but I think the focus is really on choice. And if we're going to see this big ramp up at the end of the year in meat demand as we start to restock at the meat counter. So I think you're kind of stuck a little bit as far as, the seasonal tendencies, but I commented yesterday in the letter, it's not all for naught. There could be some really good opportunities just because of how hard the sell-off has happened. I don't think you're going to shock anybody on the supply side anymore right now. We're all anticipating those placements to grow now and cash to stay relatively weak, at least for now. But once we start to get past December 1st notice day, there's a good seasonal precedence for this market to really take off. I mean, from these prices, it may be a bit of an uphill battle, but that's really some of your best shots. So guys that are really well sold, really well positioned, have caught this move really well. There's some pretty cheap out of the money options right now for February. And there's a lot to know between now and then, demand wise. Like I said, supply, maybe not so much, but that's still going to be a changing. There's still going to be changing sentiments. All the speculative volume is in February right now. So kind of eyeballing some out of the money calls for the guys that are really heavily sold. In that regard. Seasonally, we see that a lot. The market really starts to strengthen up. Sometimes we get some really bad weather issues as well. So, I think the dust has settled after the report. Now it's time to kind of look past that, try to plan ahead, especially if you got production coming up in Q1. If you're not sold, I mean, LRPs and put options are still some of the best bang for the buck right now that you can do rather than just outright selling it at these prices. And the feeder market has this kind of seasonal tendency just to kind of stabilize, to level off right now. We are still at high prices, so that downward risk is still there. So if you're really well hedged, it's probably better just to kind of sit tight. If you need to pick up some cheap cattle here, now's kind of the time. You can't really go wrong with the price structure if you're looking to buy some 5 weights or something that's on the lighter side of the market here to feed out. So I think there's some good opportunity here on both sides. And we're trying to play kind of the demand game right now as we get past the holidays.
That's really good stuff, Ryland. Are feeder margins good, Ryland, right now? Forgive me my ignorance, but
they're okay. I mean, they're right now. I think anybody that's bought anything is probably waiting for a little bit more of a rally to sell. But now, at this point, it just kind of depends on. It depends. I'd say they're pretty good though. You got cheap corn, you got much cheaper feeders. You just got to kind of hope that maybe the back end of the cattle market can really strengthen up a little bit more than from here.
Oh, it's really good. All right, guys, we got a couple of minutes here as we roll into the open. Anything else on anybody's mind before we take a well-deserved break here for the Thanksgiving holiday?
I was just going to add in a lot of talk about doing export business in soybeans, and we see good export sales today. But we have to ship those bushels, and week over week, we shipped 330,000 less tons. And to put it in comparison with last year, it's about 880,000 tons. So sometimes when we see a little bit of problem in South America, the Chinese will step in and buy our beans, but they are known to cancel those in the future if things look better. So I think those risk points really come to a head sometime in, you call it mid-Jan through early May, of some things that could really go south for our bean market. So I concur with Justin's thoughts of trying to protect that in the most judicious way.
That's a good point, Ben. I appreciate that. You did bring up also another point I wanted to make. Weekly export sales will be delayed a day because of the holiday. So that data will be out on Friday. We'll have that in our commentaries, and then probably discuss on Monday morning as well. Like I said, as we go into the open here, we're going to have option expiration. If you have yet to follow up with your consultant, please do so today. Make sure that you've got everything positioned the way that you'd like, as we go into a short trading session on Friday. AgYield, as always, will be fully available.
Good time to roll hedges too, Dan. Spreads are making new lows as we speak. You got those hedges, don't wait.
Good point.
Yeah, and
Good point.
I think we're about out of 60% of our bear spreads that we've had on for a long time. So try to get the rest of those done this week, probably between now and first notice day. But yeah, they're acting like they should, which is usually a good time to take advantage of it.
Yeah.
Things can change for whatever reason, but yeah, I mean, like these to July is at 39-cent carry. A lot of guys we're rolling at 20 to 25. I think now, and you get into the 40 area, like that makes a lot more sense to cover your costs and maybe make a little on storing it. So now's the time to actually start rolling, I think.
Yep.
That's good stuff, guys. We just opened here. We got corn up too at 471.5. Jan beans are down 7.5 at 1369 3/4. And December Chicago wheat's up 5 3/4. Any parting shots, guys, before we go this morning?
No, happy Thanksgiving. Hope everybody's safe and has
happy Thanksgiving.
good holidays.
Happy Thanksgiving.
Yeah.
Happy birthday, Johnny.
Definitely, guys. Yes, happy birthday, Johnny. And thanks to everybody for tuning in. We look forward to talking to you next week, and have a safe Thanksgiving.
Yep. Thank you.
Thanks,
Thanks, Dan.